Hey, it's Matt Bennett. Welcome to Grain Market Podcast with Beck Hybrids. I'm a grain marketing consultant, and we've been doing this every week for a few months now. First one of the year for me. We're sitting here looking at essentially markets that have gotten a little life as we've started this week. Got a lot to talk about, though. Coming up, of course, we got the big WASDE report for January. What we're going to do is we're just going to look at what does it look like, what possibly could happen, if you will. And so I just want to kind of show you where my head's at on some of this, and we'll get to essentially the crux of the matter. First of all, what are we looking for? Of course, the first thing you're going to look for is yield. Corn and soybeans. What are the yields going to do? I've had a lot of you tell me you feel like yields should go much lower. Sometimes that's wishful thinking. Could it go lower? Absolutely. Do I think that yields will move lower? Yes. I don't have an official estimate for you for my team yet. Those are due for us for Reuters and Bloomberg sometime later today. I assume that we're going to come in with a 2.5 to 3 bushel drop for corn, and on soybeans, maybe a half bushel lower. Heard a lot of phenomenal yields on beans this year versus what the expectations were due to weather. A lot of guys, it was a mixed bag on corn. Several people in the Western Corn Belt on dryland corn had phenomenal yields, whereas some of us that had a fair amount of rain in the ice states had a lot of disease to deal with. So certainly we're going to be looking at yield very closely. Demand, is it going to be adjusted lower? Because absolutely, if you take production lower, typically the protocol for USDA is to take demand lower as well. The other thing, of course, is that feed and residual usage for corn right now is probably just a little bit too high because ultimately what it boils down to is stocks. If ending stocks go lower for corn, it should definitely be a supportive type function. If we look at, again, I've showed you this before. I want to show it to you again. You look at world corn supply and use, it continues to show a drawdown in world stocks. Basically, we have record world demand. It's something I've talked about in every newsletter. Anytime you have very strong demand, typically the only way that you curb that demand, is that you're going to have to rally prices at some point. And now this is a big if you hold production somewhat steady. Last year, it would be tough to outdo that severe crop from Brazil last year. This past fall, it would be tough to outdo the size of the crop from the U.S. Corn crop, given the fact that we planted 98.6 million acres or whatever it was. You can see here 98.7. We harvested 90. Those things could be adjusted in this January report by all means, but what you want to look for is, hey, what does yield come in at? Whenever you see yield, just because it drops, let's say, let's hope, but let's say it drops 3-4 bushel. Maybe the market's up 2 cents at the time. You're like, good night. Why is it not rallying? Well, the reason why it wouldn't be rallying, of course, is because demand could get adjusted lower. So if you look at the feed, seed, and industrial, so feed and residual usage right above it, 6.1. 6.1 billion bushels is probably a significantly high number. If you look at last year, we were at 5.466. So the U.S. balance sheet, if I look at it on my balance sheet at the far right, those 3 columns, if I take yield down from 186 to 182, I'm still looking at a carry out of like 1865. Why? Because I'm probably going to have to adjust that 6.1 billion. You can go, it's the second set of numbers or third set of numbers, feed and residual uses at the top of them. I took it down to 5.9. If I drop yield even more to 179, I don't think that's going to happen. That would put me at a 5.8 feed and residual usage number. So carryout's only going to go to 1,785. I don't expect something much below 2 billion, but I think you certainly could see a sub 2 billion type number. Now, how's the market been reacting here lately? I drew support lines here previously, overhead resistance lines as well. This is a very basic chart, but as you can see here, we dipped below support levels here last week. So the previous week, we actually rallied, as you can see, several days in a row. We tested this overhead resistance line, and then we fell back off hard. Going into Christmas, it was a good trading week. The new year wasn't so good. And then we came out here yesterday on Monday, rallied sharply. Nice little corn rally, up again here a little bit today. pushing up on some levels that, and I'm not looking at the resistance, I'm looking at the moving averages. So that yellow line is the 200-day moving average. If you can establish this corn market above that and get a close above that, then certainly it would be advantageous for us moving forward. If I look at soybeans, world soybean supply and use, once again, I mean, you've got all the beans that you would ever want. And part of the problem with the bean market, demand's really strong. Don't get me wrong. The problem is that this Brazilian crop is thought to be a massive crop. And so with that being the case, most likely this world balance sheet is not going to tighten up to any degree. If I look at the US balance sheet, the 290 million bushels, that's pretty tight. I mean, that's all there is to it. But the export program right now has been buoyed, if you will, obviously by Chinese purchases. Now, China has purchased, I've got the tracker down here. We'll look at it right here. According to USDA, as of yesterday, it was 57.4%. But most people in the industry would surmise that it's around 9.5 to 10 million metric tons, which is getting fairly close to what they originally said they were going to purchase. So if they go ahead and purchase all this, the problem is who's going to purchase beans otherwise? Because right now, U.S. beans are significantly more expensive than South American beans. And so you look, for instance, at Brazil. Brazil is going to start harvesting. They've already seen some harvest, but really in earnest over the next few weeks. With that being the case, there's going to be a plentiful supply of soybeans out here on the world market. And so by all means, you're going to really struggle to see, in my opinion, a really good export program here for the US. And so if I look at, for instance, our balance sheet, I'm going to go back to this real quick. If I take the yield down to 52, so if I take a bushel out of this thing, I think you could see carry out move lower. Is it going to be significant? I don't know, because they could adjust exports lower by all intents and purposes. So, I think overall, what we've got to understand is that, you certainly could see a situation where the bean market does not rally without the help of the corn market. That is what I'm a bit fearful of, given the fact that this Brazil crop is thought to be so massive. I mean, you got to keep in mind they plant more beans once again this year. Argentina's weather looks decent. They've been on the dry side, but most forecasts are trying to bring some rain into the country. If you look at Brazil's weather, they really don't have any dry spots. Maybe too much rain in some areas, but it's really hard to rally a market on too much rain. So overall, this bean situation from a total production standpoint, from a supply and demand standpoint, there's not a good story. There just simply isn't. So the things that we need to see on the bean market is, maybe we get some good renewable fuels legislation. Maybe we come out here this year and we actually say, hey, we're going to make a massive commitment. We've already seen it, and crush has been reflective of that, but we need to see some emboldened, legislation, if you will, to come out and say, we are going to build this out. We're going to become using our beans from a domestic standpoint is going to be a bigger deal to us than what our trading partners want to do around the world, because there's no question that we continue to lose world exports. We continue to be in a situation where Brazil's going to grow. Very unlikely that we're going to see U.S. production grow much, if any. We don't have the additional acres to bring on. And quite frankly, this year, it looks to me like growers are still going to side with a very strong corn ratio. So that's something we're going to tackle over the next few weeks. But by all means, next week, we're going to want to take a look at, hey, what does this thing look like now after we get the new set of numbers? Because it's a massive set of numbers. Not only are we going to see production, but we're going to see what stocks are. And so we'll get your first of the year quarterly stocks report. And what it's going to show is what was disappearance of corn and soybeans. Did we use as much as what we thought we did? And what is sitting in bins? What is sitting at the elevators? And that's certainly going to be a huge determining factor as we move forward on what price direction is going to look like. So if you got any questions other than that, that's most likely what we're going to detail next week. By all means, I'm going to be talking about this in my newsletter as well, but you can leave comments here on the video, or you can just simply shoot me an email. If you get the newsletter, you've got all my contact info because I keep those attached. If you don't get the newsletter, reach out and we'll make sure you get on there. So have a great day.